Okay, hold on a second.
Okay, maybe make it bigger or something.
What did she say? What did Carol say to do?
Control plus, make your screen bigger. No, your screen's bigger enough, but somehow I can see your bottom part of it.
If
Is that
somebody,
just me? Maybe my screen's much bigger than you. Maybe that's why. Can you minimize your bottom menu? That black, yeah, that.
how do I do that? Don't show this.
Try that.
I don't know how to minimize that.
Okay, that's
Sorry.
fine there. That's okay. Okay, so let's start our meeting. Oh, welcome, guests, especially to our guests. We have, I know you cannot see us, but we can see you. We have about four, sorry, where's that tennis? We have one, two, three, four. Oh, Derek is online too. We even have a distinguished guest who is our president of the board for Sacramento area chapter. We have three, four, five guests. So welcome to Virtual Investment Club of Sacramento. And my name is Jay Eagleson. I'm currently the president of the club. So I start with disclaimer. Better Investing is an education and nonprofit organization. The intent of our investment club is for us to learn how to research, analyze, and invest in quality growth stocks over a long-term investment horizon so that we can successfully maintain our own stock portfolio. The stocks that we presented today are not a recommendation of buy or sell. It is for education purpose only. So also guests, at the end, we would like to hear your comments or questions, but please save them until the questions from the guests portion of the meeting later on. And so let the fun begin. And first, I would like to welcome our new members, Barry and Jane. They were being accepted from Jane was accepted from last meeting, and Barry is the month before. And welcome to our new members, Barry and Jane. Next is our treasurer's report. Roy, would you like to go over?
All right. Yes. Get the screen here. Okay. As you can see, we are hovering around $1,000 per stock. What it is, every month when we decide to buy a stock, we buy $1,000 worth. Now this is virtual, so we're not really putting real money in, but we're running the club as if it was real money. But by doing the $1,000 even, we can just see how well it's doing, our portfolio. And as you can see, IPGP has grown quite a bit. And the last one at the bottom, BioVeritiv, is not that it dropped from $1,000 to $92. That was because of the split at Biogen, spinoff. And we kept it just to show how well our initial investment has gone, and add those two numbers together, the 1,036 and the 92. Biogen's doing pretty well. It's Five Below and Lqq haven't been performing as well as we had hoped.
Okay. So I totally. Yeah, I totally forgot there's one action item because we're using a watch list. We use this a free tool called a Morningstar watch list portfolio. So I totally forgot that I have an action item is to figure out how to track dividends. I think Joanne, just right before the meeting, Joanne was telling me that she figured out how. I was trying to create a Google spreadsheet to tracking. But we will go over next meeting and how we add dividends to our stocks so we can track better.
Yeah, I'll make sure to do that.
Okay. All right. Any questions for our treasurer's report? Okay, we just move on. Next segment is education topic. So Joanne, you can make me as a presenter. Excuse me. So the club in Sacramento area chapter, we invite guest speakers from other part of the country to Sacramento to give us some education investment related topics twice a year. Last month we had Mike Turberson, who is from Seattle area, to give us a to give a presentations. He had 3 topics. So one of them is the importance of PE. Tom and I both attended the session, and we felt that we have some takeaway from his presentation. So this presentation is about what our takeaway is, to talk about how do we use PE, especially the trailing 12 months PE, to determine when to buy and sell. Excuse me, I have cold. So he recommended to use Big Charts. Big Charts is a free software, a free website, to use trailing 12 months PE to evaluate buy and sell. So both toolkit and the online tool uses PE ratio is annualized. So annualized, for example, I listed here. So annualized is using the final annual PE for each year across the entire year. For example, so they add a fiscal year 15, quarter 1, 2, 3, 4, they add them together. Big Charts, however, is using the trailing 12 months. So trailing 12 months data is more sensitive because it incorporates data from the latest quarter. So example as, I should make example better, like I use the example as that using fiscal year 15. If I say fiscal year 16 and 17, probably make more sense. The idea, as you can see, is that is for the 12 months period immediately prior to the date of a report. Is not across the entire year, is from the current quarter plus the previous prior 3 quarters. So he talked about business cycles. So quality, so we invest in quality companies. If it's a quality company, they must constantly adding or improve their products. So the real business cycle is a 5 years from the bottom to the peak and a 1 year peak to bottom. So as we all heard, buy low, sell high. And he suggests that, so buy low, sell high. So he suggests there is a 5-year average PE. So when we buy, we want to buy at 5-year average low PE, and when we sell, we want to sell at the 5-year average high PE. So how do we do that? How do we look at this? So first, we using the trailing 12 months, we use Big Charts. The pictures on the left is all these boxes. This is what you need to configure. And you want to make sure after you configure, you store chart settings. You want to make sure you keep your settings. So next time when you look in the different companies, you're being consistent, so you won't set back to whatever the default you had before. So for the online SSG tool or both and a toolkit, they can take you directly to Big Charts. If you use online SSG under research, there's a price charts. You hover over, it will show you Big Charts 5-year chart. Will take you to Big Chart. If you use a toolkit in the SSG, it is you click on the web. You have a drop-down menu. So I don't have a toolkit personally, but I use my mother-in-law's toolkit. For some reason, I don't see Big Chart there. But however, I know Tom does because he sent me the screenshot. You tell me there's a drop down you can use. But regardless, Big Charts is free. You can play around. And I'm going to show a couple examples. A while back that Tom, after the presentation from Tom sent an email saying, hey, IPGP right now is a sell. So I'm going to talk about if IPGP is a sell for us. First, on the top, this chart is show you the stock price of IPGP. The bottom part is the earning per share. The middle is the PE. So remember, this is a 5-year average PE. So I'm looking at this as a average low PE. To me, is about 16, and which is the lowest, which is about 16. So consider will be a buy. Average high PE roughly about 26, I would say. So which right now is about almost a hit 26. So consider as a sell. This is another example of a Biogen. So Biogen right now, to me, the average low PE is about 15. So right now is a buy. So high PE will be above 35. Look, the average will be 35 will be a sell. Well, PE is just one aspect to determine where to buy or sell. We cannot just simply look at the PE. I love Mike put together this buy and sell criteria. I thought is very helpful. So he suggests that qualify as a buy or sell when every reward and risk condition is satisfied. So there are reward and risk measures for both buy and sell. There are 5 criteria. And I also grab our club per report, performance evaluation review techniques report. I put down that these 5 criteria corresponding to each column. And so let's have a look. Let's see if IPGP it's truly a sell for us. So first, the reward measure is the total return, less than 10%, which currently is about under 9%, which is good. Project the PE at or near the estimated high PE. So projected PE is a 21.7 versus estimated high PE is 21. Yes, check. The company a lot has doubled in value, found on valuation statement. So I kind of worked with Mike on this. I said, what do you mean? Because I looked. He has 2 books he written based on BI better investing methodology, which I will share with you at the end of a presentation, the books and link. He's totally okay, share with us. He just wanted you to read. If you catch any typo errors, please let him know. So valuation is like for the gain and loss, but the lot, it meaning that sometimes the same company you buy multiple times, you buy and sell multiple times. So you determine them in a lot if the value has doubled. So for us, if I remember correctly, IPGP was bought in August timeframe, and we have gained about 40%. So not quite as double. So this criteria doesn't get checked. But I know some of us have IPGP, probably we have a hold for a long time. For your own portfolio, you may want to double check if it has gained, if it has doubled in value for your own portfolio. For the risk measures, the upside down ratio is less than 3. Yes, it's 1.3. PE to growth PEG ratio is greater than 1.4. Yes, check, it's 1.8. Projected relative value is greater than 100. Yes, it's 121. So looking at this, and as he said, we want to make sure if you sell, all 5 criteria have been checked. Well, it's not quite a double for our club portfolio. So I will suggest that we keep hold. IPGP is a quality company, and Matt just gave annual report last month, and we suggest to be hold. And if we follow Mike's this checklist to sell, it's not there yet. Almost, it's only gain. We have only gained 40%. So this is his website, and his 2 books is called a Stock Study Guide Magic and Portfolio Management Magic. I actually recommend all of us to read about his chapter 3, quality, and chapter 4, valuation. I think they're very beneficial and very good. We cannot just look at one aspect of PE, and we have to look overall. There are many other things that we have to check. Do you have any questions for me regarding this topic?
Do you think it's realistic to expect the stock to double? I mean, if we think it's like overvalued, should that be what's holding us back from selling, just not doubling?
Well, do you think? Well, our goal when we when we did a projection for the high price, that is to double our double our investment in the next 5 years, right?
That is our goal. That's true.
That's our goal. But if I remember correctly, last month, I don't remember what was the high price was at. Let me have a quick look. I don't remember exact where we're. Let's see. VIX. Take a moment. Let me look. VIX IPGP where it was after.
But I'm just thinking all those other criteria are met. Now, if the price has only gone up 40%, it's going to have to go up. I don't know the math, but another 50% or something. It's going to have to go up quite a bit to reach that double, and that's going to put those figures. It's already met all the other criteria. I'm just wondering if that doubling criteria is realistic, because the idea is probably to, if we don't have that great a growth potential in this stock, to buy something that has more potential rather than waiting for this to double. We may wait forever. It may take a really long time.
It's possible.
Yeah. Gia, I agree with Tom. Now, I realize this is Mr. Torbensen's, presentation. If I had been there, I probably would have said I don't agree at all with the price. Even if it's doubled, if it looks like it's going to continue to grow, to me, that's not grounds for a sell. Some of the other criteria are great. I'm sure he mentioned, though, you don't use old SSG. You would run a brand new SSG and see if those numbers still hold up. Because it's possible you have, 4 out of 5, let's say 4 out of 4, because let's ignore price for a moment. With a new SSG, maybe 1 or 2 of those will drop off. So I think it's very valid to consider. I'm very interested in trying that, but only with new SSG, and I have Tom's concerns about using price.
This is the SSG that last month Matt presented.
I understand, but when I do a sell, I do it that day. I don't use. To me, a month is too old for a buy or sell recommendation. That's me.
Okay. So Matt, since you are following this company, so what your impression about this company?
My impression was that they were going to continue to grow, right? So they had a lot of future earnings potential as well. So if you look at the trailing 12 months PE, yeah, it's pretty high. But if they have pretty good growth potential going forward, the future PE, if you will, might be more reasonable. I guess the question I had is why double? Did he explain that at all? Why it was doubling in price and not a 50% increase?
Yeah. He actually did not present this chart at the presentation. I grabbed this chart at his book. He did not mention this chart, but based on the communication, Tom sent him a question and I sent a question. He also mentioned, because he said that you cannot just simply look at the PE. So I decided to go back to read his book and grab that valuation, the quality segment, and I found this criteria. Oh, that's interesting. So, yeah, I guess, yeah,
I see.
Roy is right. We don't have to 100% agree, everything have to meet with this 5 things. Why has to double? I believe a few months ago, Roy gave a presentation on when to sell. Maybe next time we can take a look when to sell and the checklist to see if truly we should sell IPGP.
Yeah, I think another thing to consider that's tough with the virtual money is, the effect of taxes and transaction fees and things like that. So I imagine you'd want some, if you're only looking for a 30% increase and you're going to end up paying a lot of that in taxes, might not be worth it. But if you double,
often what's recommended is that you use a challenge tree, and with a challenge tree that includes the impact of taxes. I mean, if you've got a dog or a stock that became a dog and one that's going to be a superstar, it'll wipe out those taxes immediately. But if it's sort of about the same, then you could actually lose money because of the taxes. So the challenge tree is good for that.
So how about this? So
I'm
who's
gonna
going to
call. I'm gonna call time. So
Okay, excellent. So I'll just make a conclusion. How about this? I will ask Matt to take a look the when to sell. I can point to you when to sell checklist. It's under education topic, and then maybe look the challenging tree and to figure out that whether truly sell. Can you maybe present to us next month, Matt? Is that okay?
Yeah, on IPGP.
Yes.
I think Matt
Yeah.
and I are doing a stock study.
Oh, okay. Can you guys have a look at this?
Yeah.
Okay,
Well,
excellent.
okay.
Yeah.
All right.
Okay, thank you. All right, next month, shall we do a education topic about the comparison of what do you call that?
Toolkit and
Toolkit and
SSG plus
SSG.
the online, yeah.
Yes. So Tom, sorry, Roy is going to give education topic on quick comparison of a toolkit and online SSG. Okay. Let's move on to stock studies. So we are going to go over pharmacy services. Who's going to talk first? First of all, Tom, Hanny, okay, one of you start talking about why do you decide to pick this industry and what's the idea behind to pick this and why you decide, yeah. And then tell us about industry as well.
Did you want to go, Hanny, or do you want me to start, or what do you think?
Go ahead. Go ahead.
Well, we found it seemed we were looking around for stocks, and it seemed that CVS and Express Scripts were recommended by Morningstar. They had high star ratings, like they were possibly undervalued, and also there was talk about pharmacy benefit managers having adverse effects on the price of drugs, and I forget the name. I think Mylan or something with this what's that thing, EpiPen. So anyway, they were kind of in the doghouse, I guess, in the news. So it seemed like an interesting area to explore, thinking they might be undervalued for the news rather than for the fundamentals. So we explored them, and they seemed reasonable, so we continued on with them. Now you look at the different, like if you look at manifest investing, it's called pharmacy services, and then in Morningstar has a little bit different criteria for the peers, but anyway, they some of the companies may vary, but these two are in both categories. So I don't know. Do you have anything to add, Hanny? Hanny, are you there?
Sorry.
Okay.
Yeah. Okay. Can you hear me?
Yes.
Okay. The only thing I have to add is that it was a little bit difficult. We found how to classify some of these companies because Express Scripts is predominantly a pharmacy benefit management firm, whereas CVS is both retail and the PBM. So when you look at the competitors, there's some of them like United Health that also have insurance, and so there's quite a range of services that they offer. So it's sometimes difficult to compare based on sales and profitability because they do slightly different things.
Yeah, like the pharmacy benefit managers have much less lower profit margin, than some they're like a retail store. You know, they have big dollar volume but low profit margin. They might be able to, you know, make up the money on the volume, but the profit margin would appear lower and appear PBM like Express Scripts. So do you want to move on to the stocks?
Yes, please.
Okay.
So Express Scripts is up. Do you want to take it away,
Sure.
Annie?
Okay, so Express Scripts is predominantly a PBM, and they have a number of different sort of services that they provide. They have a mail order service. They have they work with health maintenance organizations, insurers, third-party administrators, unions, and so on. And basically, they have two segments: the pharmacy benefit management, and the other is sort of distribution of pharmaceuticals, medical supplies to clinics and other organizations. We picked this company. We think it's high quality company because of you know, some of their profitability has been quite good over the years, and their sales have been growing at a pretty good rate, but recently the sales have slowed down a little bit. We can talk about that in when we look at the SSG. So should we go through the SSG, or should I continue with the first part here?
Oh, that's fine. I'm glad you spelled out BPN because I thought it was a process manager, but I guess in this industry,
Pharmacy benefit manager.
Yeah.
Yeah.
On the first cut, in looking at why this is a good quality company and so on, what I tried to do was get some information about the industry, and that came predominantly from the BetterInvesting website, looking at the SSG and looking at the competitors, and then a few other sources. But basically, you can see on the, I don't know if I'm looking at my own screen rather than what you have, because it's just easier. But if you look on the first page of the first cut, there's a table that shows various metrics: historical sales, 5-year average, 10-year average, and so on. And so like I said, the 5-year average is low. It's about 1.1%. The industry's at 6.9, but the 10-year average is almost double or 3.5 times better than the industry average at about 24.6 versus 6.9. The EPS growth is also pretty healthy. It's about twice the S&P 500 growth rate, and about also double the industry growth rate. Pre-tax profit, this is, I think, where they have a competitive advantage. Their 10-year average is 18.3%, relative to the industry at about 3.1. They've invested a lot in technology and in their supply chain, and I think they're also the largest PBM in North America, and they operate in Canada and the US. And because of the economies of scale, I think they've been able to improve their profit margins. So the percent pre-tax profit on sales is starting to lag the industry. For the past 5 years, it's 3.3 versus 6.2. And return on equity is about the same. The 5-year average is 11.8 versus 12.9, so it's pretty close. And then their debt is high relative to BetterInvesting guidelines, which I think are around 30%. They're sitting at 43.2% debt, but I think that's due to a very large acquisition that they did a few a few years ago. So they'll probably work that number down. And they're also part of the debt, I think, is they've been buying back a lot of stock, and that's kind of masked some of their some of the you know the issues they had with sales growth and profitability, because they've been aggressively buying back stock, so um, their their profit margins have been doing well for that reason. So that's basically a quick rundown of why they were good to study and how they make money. Any questions so far?
No.
Okay.
You can carry on to talk about your forecast. Why did you pick those numbers?
Okay, so the forecast is quite conservative, and when you compare it to some of the analysts out there, although Tom just gave me something recently that was saying that they might the forecast might not be as good as they expected. But what I did is sorry. Okay, if the screen is changing.
I'm updating your data from 310 to 317.
Okay, so what I did for the average PE ratio, I took a pretty conservative view. I took the highest three high PEs and low PEs and took those out. I treated them as outliers, and the remaining four give an average high of 18.5.
I'm sorry. I missed the forecast. Why you gave? Sorry, Joanne. Analyze the first tab.
Oh, okay. Yeah.
Going down. 3.5. Did you talk about why you gave 3.5? Because
not yet.
No,
I was talking to the
historically
screen.
is about 25%. Yeah. Why do you give 3.5?
Right. If you look at the growth chart, if Joanne, if you can go up a little bit, you'll see on the chart that sales is flattening out, and in fact, since 2013, sales have been going down a little bit. So I wanted to be conservative, and so I used the 2-year estimate, the analyst estimate of 3.3. In terms of, so does that answer your question, Jay? Or
yes.
Okay. I mean, if you look at some of the analysts, they're projecting a little bit higher, depending on who you read. But I basically just said that they will, on the upside, what could happen is that the acquisition that they did in 2012, I think the company is called Medco. They haven't really fully realized the synergies yet. I think they're struggling to integrate that acquisition, and so potentially, if they can improve that situation, then their growth rate might exceed that 3.5. But just to be conservative, I used that number. Now, if you click on the historical EPS for the preferred procedure. Yeah, okay. So I use the preferred procedure to calculate the 5-year EPS growth rate, and what I did here was I used the 3.5% sales growth rate, and then pre-tax profit margin. I said that historically they have a pretty good pre-tax profit margin, so I increased it to 4.3 from what it's shown there, the 3.3%, and that's kind of in line with with the Morningstar, or sorry, the value line numbers, and the tax is. I discussed this with Tom, and he had a good point. The 22% tax number is a bit of an anomaly. If you look at historically, their taxes are sitting around the 36%, so use that. And then they are buying back stock aggressively, so Again, Value Line uses a more optimistic shares outstanding. They use something like the latest Value Line that was posted, I think, used 490 or something, 460, I can't remember. I used 550 just based on information from their annual report, and they have a program to buy back shares. I did a little bit of math, and it's in at the end of the first cut. It shows kind of where that number came from, but I thought that was a good middle ground between the Value Line and what they were projecting in the annual report. So if you take all of that into consideration, you end up with the EPS growth rate of 2%.
I'm just curious, what's the judgment for sales in Value Line? Value
It's
Line judgment for sales?
120, and I have 119, and it's 120.
Sales 5-year sales growth rate for in Value Line is what? 120?
Sorry, yeah, you
Sales.
see where it says result, 119, 110. That's the sales. So in Value Line,
in terms of a percent, what's the Value Line?
I don't recall, but I just I tried to, because it wasn't clear exactly, but if we can bring
23.
that up, it might.
What's 23?
Can we let them make their presentation before we get into the questions? We're never going to finish that.
Okay.
So I think that's the first part. If we go to the second one, the page 2.
Is this right?
Yes, if you can just go up a little bit. Well, that's fine. That's fine. So the average high PE is 18.5, and based on the preferred procedure earnings per share, you get a forecast high price of 110, and then the low the low price, I just used the average from the SSG, which was 59 for the average low price 5 years. And if you look at the closing price, it's about 65. So I thought that was, again, being conservative. It would have to drop about I guess 15% or so to get to 59. So that's possible. It's not unlikely. So I thought, it's conservative. It's about 10% drop. If you put all of that in, I got a upside downside ratio of, I think, I'm not sure how that 7.4 came in. When I did it, it was 3.1 to 1.
The share price is down recently.
Oh, the share price. Okay, she upped great. Okay. And then potential appreciation of 69%. So it's in the buy zone, but my recommendation would be to just wait and watch, because there's a number of factors that are working against them right now. One is a lawsuit with their biggest customer, and the new healthcare system that's being proposed by the Trump administration is a big question mark as how it's going to impact some of these drug companies. So a prudent approach would be just to kind of wait and see, as if the price starts to move up. We still have a good buy range, and we could look at it and then maybe buy as it starts to going up, because it could stay sideways for quite a while, and so that'll impact the annual return.
Great, thank you, Annie.
Do you want questions now or wait till Tom?
Well,
I'm just
because
curious.
he already addressed, he said that just wait and see, then there's no point for me to ask.
Well, I think as part, we're here to learn, and I just have a comment that as I emailed before I left town, um, I have a real problem with 2% earnings projection coming up with 18.5 for PE. That's, like a several 100% peg. But I noticed that the analysts were around 24%. So it seems to me that even though the preferred procedure came up with a 2, I think in this case, I would probably ignore that and use something closer, like maybe a 14, somewhere in between, which would then give you an 18.5% high PE would be, fine. It just seems to me that the 2% versus the 18.5, just there's something wrong there.
Yeah, that was
Roy,
my.
should we see what that looks like if we change it?
That'll probably throw the high price way off, but yeah, go ahead and try that. See what it looks like.
$228. What's today's price?
Mid-60s.
Okay, that's yeah. Well, my question, the question I had was sales. The sales was about what, 25% historically, and I felt like give 3% is quite low. That's why I was asking what was the project judgment from Value Line or other analysts.
Do you want me to try to find that?
Yeah, it's I think it's a little higher than that. I use the 3.3% or 3.5% from the analyst estimate that
Yeah.
came from the
Oh, the
SEC.
December 16th was 8.
Yeah.
Oh, you have it, Roy?
You just had it. I saw it.
That was at LKQ. Let's see.
Oh, okay. Sorry.
Sorry, I can get. I just loaded the most recent
Okay.
value lines.
Okay.
It dropped from 8.5 to 7.5 between December and March 17th.
Okay.
But 7.5 is still quite a bit more than the 3.5.
Yeah, 317. Okay.
And
Sorry,
then
where
the
did you see that?
7.5.
the earnings per
Pinpoint?
share is 15, which may be a little high with only a 7.5. But I'd be willing to go like 7 and 10 or something.
Yeah, that 7.5 is 3 years, right?
Well, it's a 3 to 5 year, so I look at it as a 4 year. But yeah, I mean, there's a lot of wiggle room with Value Line.
Yeah. So that's why I felt the sales could be a bit higher.
What would you put?
Let's give.
I'd go 7 myself if I were doing it, but
Okay.
Well, let's just see what it looks like.
Yeah.
And then what are we going to change the EPS?
I would drop it to more like
Yeah.
try 10, see what it looks like.
$160. Today's what? Mid 60? Today's
About
price?
65, yeah.
65. Yeah, that's about. Yeah. Hmm. Okay.
That's still a little frothy, but it's a lot
Yeah.
closer.
Yeah, a lot closer. But however, Henny mentioned the concerns about, the healthcare reform and the lawsuit. Yeah.
Yeah, and
And
this obviously needs tweaking because the upside down being a 15 to 1.
Yeah. Oh, that's true. Yes.
That's way off.
Yeah, way off. Yes.
But
And this-
anyway, that's more in line with my thinking which could be faulty on this stock. But
And
Yeah.
This company, Anthem, that they're having the dispute with, represents about 10% of their business. So, and their contract only lasts a couple more years. So if Anthem leaves and goes someplace else, which may or may not happen, that's a potential 10% hit to their total sales.
And what percent of their business is in Canada?
Very small.
Okay.
Yeah.
Are they
you're
planning
thinking of-
expanding?
Well, we have the second highest drug costs in the world, and there's been a lot of talk about trying to reduce those. So Canada's population is about 35 million compared to 330 million in the U.S. So even if they expanded in Canada, I don't think it would make a huge
Okay.
impact.
Okay.
Okay.
Well, thank you. That was a good presentation.
Yes.
I just had one question actually. If the 7% sales growth, if you look at the value line, I was going more by the actual revenue, and so that the 7% didn't match the revenue that they're projecting. So. Like the growth rate versus if you look on the top right hand corner there, just a little bit up higher, yeah, there's revenue per share of 233, and if you go down a little bit, see where it says revenue in million and it says 1.2 billion, just above operating margin.
Right. Can you see my cursor? Yeah.
Yes.
Right.
Yes.
So I was trying to reconcile the 7 with that number, and that's why if I use the 3.5 or 3.3, I come pretty close to that revenue number. So I wasn't sure how they kind of
that is something that has always confused. I've got the same issue with my value line with CVS. It's something that's always confused me. I mean, they project these revenues out, and if you do compound annual growth projection, on those two, it's often different than the numbers they give over on the left-hand side further down, and I don't know how to reconcile those.
If you do the multiplication out, you'll probably come close at 4 years. It's that 5th year, because if you notice at the top, it gives
I
you
did
the
4 years.
time frame.
Okay, I have to call time. Who's next?
That's me.
Okay.
That could be another education topic on the value line, Roy.
Okay,
well,
so
since you brought it up about the education, I just checked my calendar. I'm going to be out of town. I'm going to Israel, so if I can postpone mine till May, or no, I mean till June. Wait a minute. This is April. Yeah, if I could do it in May, that would be better for me.
Okay.
So maybe you could do value line in for April.
Okay. Got it.
Hey, we have 15 minutes.
Okay, my stock is CVS, and it has a good history of sales and earnings growth. Pre-tax profit margin is decreasing, but the company says that's because their PBM segment now represents a larger part of their business than their retail. It has a lower profit margin. Their debt is increasing because they're borrowing to make acquisitions. Also, they're buying back stock. They say they're working hard to repay debt. They operate 9,700 retail pharmacies, plus they have nursing home pharmacies, infusion, mail order, and then they also have this pharmacy benefits management company, which represents about 60% of their business, and retail is about 40%. They're a little bit smaller than Express Scripts as far as their PBM, not dramatically, but a little bit. Now, I projected 6% for sales, and this was a little maybe controversial. It's lower than historical, And I looked at the value line. I looked at a bunch of other estimates. This if you look at the value line on the sort of the middle left, they're projecting 11 for sales, 12 for earnings. But if you go like Hanny was mentioning, go to the sales per share or the sales, do a compounded growth for 4 years, it comes out 6% and 4.7%. So there's a big discrepancy there between the two. And I picked the 6, the more conservative. There's other, other places, a lot of places were projecting about 10% growth, but I think this 10% growth is probably for earnings rather than sales. They don't, analysts project earnings, and part of that is masked or whatever by the fact that the company's buying back a lot of shares. And so if you buy back shares, then your earnings per share can grow faster than your forecast, or your earnings can grow faster than your sales. We're to this part here now. Is there any more on that first cut that I need to go over? Because I don't have it up in front of me here.
Once you start getting into your judgments, then we go to the SSG.
Okay. So
do you want me to go to this?
So I can, go to, I guess, click on the historical EPS, and we can look at what I used, because I used preferred procedure. I used the 6%. I used the preferred procedure. And so I just, I kept the, I guess I increased the taxes a little bit over the default, and also I used the value line projection for the share count, so that boosted the earnings per share a little bit. So I guess you could move on here.
Tom, why isn't, oh, go ahead.
Sorry. I was just going to ask about the tax, because it says 3,900. It should be maybe 39, or is that a typo?
Whoa, that.
Yes.
Yeah. Would that change anything?
In 9.6?
Yeah, it changed. Now they have some earnings.
Good catch, Henny.
Oh. I wonder, it's just 39?
Can you just did,
well, yeah, it can be 3,900%.
Yeah, 39% then gives you your 9.6%.
Yeah.
Yeah. Was that, what was before, 9.5?
3,900.
No, it was 9.6. It's just somehow it got typed in as 3,900 instead of 39.
Okay.
Thank you for catching that. So anyway, I guess it comes out. It's the forecast high price of 166. I don't know, what's it selling for, about 80 or something like that now.
Yeah.
78.
Okay, so it's, I guess this iteration projects it to double.
Yes.
And I guess I don't know where the upside downside ratio would be, but not something too outrageous, but not. This is possibly easier to see when it's so big, but you can see such a small portion of the screen. I'm wondering if it might be better to decrease the magnification. But I guess it probably doesn't. It doesn't really matter for this time. So I don't. I picked 63 point. No, I don't remember how I came to 63.8 as the.
Let's click that box.
The low.
You use the calculation, the low PE times the low EPS.
4.9 went to 4.92. Use last 4 quarter earning per share.
Oh, okay.
Just a tiny bit change, marginal.
Okay. So I just went with that because it seemed reasonable.
64 is about today's 69. Yeah, yeah. Okay.
Well, that's probably if today if it's well it's in the 80s, right?
Yeah, I mean the 52 weeks. Yeah,
Yeah.
low is a 69, so that's
Okay.
good.
So
Okay.
why did it drop so much from the 106?
Don't really know. I guess there's the political concerns. I didn't identify any problems necessarily.
I
They don't
think
have
I
the
think
big lawsuit or defection. Yeah. I didn't uncover any problems other than the uncertainty of the health care and then possible what they're talking about controlling drug costs. But I don't really think that has the pharmaceutical lobby is so powerful. They spend so much money. They are so good. It's really hard to put one past them.
I think you're right that it's a lot of. I've been looking at all these health care stocks, and it's the Trump effect, and I think that's the reason they're all been down. But if you look at I looked at some of the health statistics and so on, and they're on the first cut, and they're projecting a significant growth in both pharmaceuticals, like use of drugs, and because of the aging population. So I think both those factors are going to increase volume.
Okay. We have 6 minutes.
I have a question on CVS, what they do. So they have 3 segments: pharmacy services, retail pharmacy, and a corporate. What is a corporate? Like a franchise?
I don't remember. It's much smaller than the others, but honestly, I don't remember. I'd have to look it up.
If I remember discussion from about a year ago, what it is, there's certain companies that contract with CVS to have their employees buy drugs there. Like Kaiser is in-house. Well, if I worked for that company, so instead of going to Kaiser, I'd go to CVS. I'm supposed to get a break. It'd be cheaper than retail going in. That's my understanding.
Mm.
I don't remember that. I looked through their management discussion and analysis where they talked about their different segments, but honestly, I don't remember what that segment was. So much smaller than the others, I didn't pay much attention to it.
Right. Okay. I'm just curious. Actually, I own CVS. Last time, a few months ago, Tom, you and we were talking about healthcare, and I bought CVS. Actually, it does quite well for me.
Well, that's even at this price. Well, that's good.
Yeah.
Did you want to go over how you came up with your judgments, or are we okay with that?
Well, I don't remember exactly what I put on. I spelled them out in the first cut.
Oh, okay. Well,
Yeah.
with your average
there. Tom, my only concern is you used 21.4, which was the average, which is just about the highest. It was 16, went to 19 and 24, and now it's been dropping 24.9, 24.6, 21.7. So because it's been dropping the last 3 years, I would probably want to go lower.
The high PE, is that what you're talking about?
Yeah.
See, Tom, it's 16, 19, 24, 24, 21. Do you want to try to change this and see what it does?
What do you want? What do you want?
You-
What do you suggest?
I'd like to see what it looks like at 19.
Okay.
See, it's still a buy. It just dropped from 5.8 to 4.6 to 1.
Okay.
And so that looks better to me.
Okay.
And what's the current price? 78. So it's just under doubling, which I think is more realistic. And if I'm way too low, that's great. You know, I'm willing to accept that.
Yeah.
Yeah, that's okay. I don't really have a problem with that.
Yeah. The return still at with high P is about 15%, and with average P will be return at 11%. Sounds pretty good. Okay. Can we take a look at the PER very quick? The last tab, the company.
Oh, PERT's a little ugly.
Yes, that's why I want to take a look. It was 2016 has some negative numbers.
Yeah, I don't really have an explanation for that. Why they're pre-tax.
Well, sales have picked up. So, and it seems to me that there's been restructuring, so they costing them money. So that's why the PTP is down. You said they were buying back shares. That's probably why the earnings are going up slightly.
Yeah, they've been buying back a lot of shares. They also made a fairly big acquisition. But I don't really know.
I think the acquisition cost it's why the PTP is down. But I didn't fully research that company.
Hey, Jing, you are off quiet. Do you have questions or comments? No?
No, I did have some, but that was about ESP. It's okay.
Jane's volume is too low for me to hear.
She said that she had, yeah, it is kind of quite low. She said that she has some, but then she said it's okay. I think she had questions about ES, the other company, but not this one. I saw she typed the question in the bottom.
That's right.
Okay. Matt, do you have any questions or comments?
No, I mean, in comparison to the two, I like CVS better personally.
Yeah.
They just seem a little bit more stable. I like that they pay a dividend. There's a lot of questions with Express Scripts.
Yeah, CVS pays a good dividend, and they're planning on increase. The payout's about 30% now. They're planning on increasing it to 35%.
Wow.
Yeah, and I think they have good growth prospects, even despite, whatever's going on with the healthcare kind of nationally. I think long term, the trend is definitely in their favor for sure, even if it's not in the next, few years.
Yeah.
And,
so I'm just
my main concern with Express is their lawsuit with Anthem. That it's been going on for a while, and it's not going to end amicably, and so.
Yeah.
Yeah.
If your customer is suing you, it's generally not a good thing.
Yeah.
But just a few years ago, they had a big blow up between Walgreens and Express Scripts, and that that resolved itself. Both companies are doing fine now, but there was a big controversy between the two 3, 4, 5 years ago.
Okay. I'm curious if Walmart Pharmacy is a competitor to CVS or no?
Oh, only in retail. They don't have a PBM as far as I know.
Okay, got it. Okay, so if we don't have any questions, so should somebody make a motion? Do we have a buy?
I move that we buy CVS.
Okay, anyone is going to second that?
I'll second.
Okay, you cannot second. You present it.
Oh, okay. Well then, okay. I guess
I'll second it.
Okay.
I'm not a neutral observer, so okay.
Okay, so it has been moved to a second that we buy $1,000 of CVS. Now it's open for discussion. No discussion, then we cast to vote. I have sent you a voting form through your email. You can vote one buy, one sell. If you want to, you can also, even though we did not really talk about sell in depth, if you would prefer to vote for sell.
Yeah, I think the buy and sell actually should be done after all the reports, not just after the stock
good
study.
question. Thank you, because I forgot to mention, this is the first time we are moving our reports, quarterly and annual reports, to after the stock study. Thank you. Let's not vote yet, because we still need to talk about LQQ and HER.
Good point.
Yes, good point. I'm going to move that in the future meeting agenda. And let's just vote, hold on to your vote. So next stock presentation, Matt and Joanne's going to be a pair of a stock study committee. For this month's meetings, next month, excuse me, new business, we don't have any for this month. Next, let's talk about Lqq Annual Report. Jane, the floor is yours.
Right.
First of all, do you guys have any questions for the key, for the report that Jane filled out? I thought it was a great report, Jane, by the way.
Thank you.
Yeah, I thought you've done a very good job on give the reports for that.
Oops.
Any questions on that report? If there's not, then we will move on to SSG. Okay,
Oh,
can we just?
I didn't. Did she do an SSG?
She did.
Yeah.
Okay.
She sent out
Sorry.
email.
If
Oh,
she
you can
can't-
give to me. It's on my screen.
Oh, it's on your screen? Okay,
Yeah,
good.
I have it. As just
I didn't think we were gonna. Okay.
Yeah. Okay. Okay. So let me make sure I have the latest. No, let me fresh data very quick. Okay, LQQ. So since it's annual report, we're required to give a new SSG. Jean, can you talk about why do you give that 8% for sales and 10% earning per share forecast?
Yeah, certainly. Because the sales have been declining, especially for the last 2 years. So to be conservative.
Can I interrupt you for a second? Your mic does seem like a very low. Can you either talk louder or make the volume higher?
I did make it to the max volume.
Maybe put the can you put the speaker or the microphone closer to your mouth?
It's a computer.
Oh, that's better.
Yeah, is it better?
A little bit.
Well, speak louder.
Yeah, it seems that the sales has been declining, especially in the last 2 years, and so that's why, to be conservative, I pick up the last 2 year sales, 8% for sales growth, and also the EPS as well has been declining. So I just I use the preferred procedure. If you go to preferred procedure, yeah, I just use the most current annual report to decide the gross margin ratio. That's how I come out with the 10%.
Okay.
According to the preferred schedule procedure.
Okay.
Yeah. So with 8% in sales and 10% in earnings per share, then you look at the second page, and also you look at the debt has been going up because of the acquisition. And as I mentioned in the first, the quick chat, the company basically has very, very low organic growth in revenue and, of course, in earnings as well. So they have been basically growing by acquisition. So with the acquisition, they have basically financed all the acquisition with debt. That's why the debt is going up. Second page, please.
Okay, I'm also kind of shocked on the down on the pre-tax profit and the equity for the company.
Yeah. So when I did the SSG, when I decide the high PE. At first, I just went ahead and discounted the 25 for the average for the past 5 years. But then Roy brought up a good point, so I kind of adjusted further down to make it 20, and that is close to the average for the past 5 years, the PE, the high and low PE average 21.2. So it's lower than the 21.2, and just to be conservative, I think that's the right number to use. So with that, I got the estimated high price of 47, and for the low PE, I just went ahead and used the 14.2. That's also discounted from the average low PE 17.8. And with that, then I come up with hope for this stock, and the reason is because as I mentioned, both the earnings and sales have been declining, and also the organic growth is like 3%, 3.8% for the last quarter, and for the whole year is like 4 point something percent. And basically the acquisition have been integrated fine, but then it seems that, but of course it takes time to see, but it seems that the company is trying very hard to acquire and incur a lot of financing and acquisition costs, and also the acquisition, the acquired businesses are not necessarily with high gross margin, so that kind of bring down their gross margin rate. So with all that in consideration, I feel that this company may have some difficulties in reaching their goals for the shareholder, and it turned out the SSG is over a whole. So, and I just feel that perhaps somewhere, I mean, because I'm holding the shares in another company that like MGA, and that may be something that we can consider another competitor in the same industry. If it has a better prospect, then we can consider switching.
Okay, thank you. Any questions?
Oh, great report.
Yes.
Yeah, I'm not a big fan of this company. I have to agree with that, but I still, I have to question, this setting the average high PE so low compared to what's its current PE?
20.8.
20.8. Okay, it's I guess maybe the growth is slowing down. Well, because I guess they're running out of companies to buy. But yeah, well, I guess it doesn't. If we're probably going to dump it anyway, it doesn't really matter.
Yeah,
But,
I remember we presented this Lqq and Jintax. Personally, I like Jintax better. Last month I was to Shanghai on the airplane. The airplane window seat, doesn't matter now because we don't own Jintax. The Jintax has a diminished, dim the window at the end. Yeah, they were able to do that. It was amazing. I thought about if that's a Jintax company's product.
well, yeah, they do have that on, I think, on one of the Boeing planes anyway. I don't know what.
Yeah, it was Boeing planes. Yes, it was. Yeah. So, but anyway. Okay, so I guess this can be Matt and Joanne, they can look into see if they can find a better company to replace.
Well, we've already picked our companies.
Wow, you guys.
We've been talking.
Okay.
We have a meeting tomorrow.
Okay, awesome.
Oh, great.
Okay. So, all right. Then can we vote now?
One thing I want.
Oh, no, sorry, Roy. I forgot about Roy. Excuse me, Roy. I forgot about you. Do you guys have any questions for Roy's presentation on the HEI, HECO first quarter report?
Joanne, would you throw that up real quick?
Let's see. Do I have?
Yes, you had it.
Yeah, right there. Is that it?
Yeah.
Okay,
Oops.
scroll.
Sorry.
So you're fine.
You know what? It's hard. I've got this on my Matt, I mean on my PC, but
Okay.
this PDF doesn't open on my Windows, so I don't.
Can you scroll down?
Let's see. Let me
You can scroll down. Can you try?
see this.
It does not. Oh, won't let you?
Okay, here we
Oh,
go.
there.
Okay, so where do you want me to go to? Right here?
There, right there. Right, stop. What?
Okay,
Okay.
sorry, sorry.
As you can see on the SSG, that we have 11% sales growth projection and 13 EPS, and for this quarter they've outperformed that, and for the trailing 12 months, so they've done well. Probably the only thing that would raise an eyebrow is the current PE and the relative value. But as I've said, it's richly valued, but it seems okay given these high numbers, plus their cash flow increased by 44%, which is astounding to me. And they're earning by 28. So I think it's good. It's a 1.8 to 1 upside down ratio, so I can't recommend buying it, but I wouldn't be surprised if the price didn't continue to grow. On the last part of this, it says, "Are you proposing any new judgment numbers?" No, I'm keeping with it. But if they continue to do well in the second quarter, I may do a 6-year review and make some adjustments next time.
Okay.
I felt for 3 months that wasn't valid to make the changes now. So anyway, I think it's doing great. I'm glad not only we own it, I own it, and it's
Sorry.
been nice.
Yes, when I heard Trump is going to increase the military expense, immediately I thought about HECO. Because they do have a part of it, they do have a military
Well,
part. Yeah.
It was interesting this weekend being down on a military base for 3 days. So.
Why do you say that?
Yeah, they're all looking for growth in that area.
Okay.
In all sorts of different vehicles.
Yeah. Yeah, we're doing good on HECO. All right. Any questions for Roy on HECO? Okay. Can we vote now?
Okay, but before we vote, I just had the idea of asking, everybody's watching a stock. Does anybody think we should add to the stock that the person is watching?
You mean add more shares?
Right, yeah, before we vote, because I can't really highly recommend Biogen at this point. No. It's okay, but I don't give it a strong buy. Anybody have a stock they think we should add to?
For Disney, Beauty and the Beast, I keep getting so they are right now sounds like they sell very well and the box office, Beauty and the Beast. I don't remember, was Disney is a buy or was a hold?
I thought you said it was a
challenge. I think it was a hold.
Yeah.
It's a hold, yeah.
It's pretty close to a high. It's up there in price.
Yeah.
It's not
I think currently, according to our SSG, the buy is LKQ and 5.
Oh, the ones that are low.
Yeah, but I don't recommend LKQ and not 5 either. So.
Okay, that's fine.
Okay. You can vote one buy, one sell.
Did everybody get the email with the voting?
Yes, supposedly, yes.
Oh yeah, I got it here. Yeah.
Okay, so check your emails for the.
Yeah.
Do we have to choose one buy and one sell, or
no?
Just
one buy, one sell. If you don't have anything to choose, you don't have to.
Yeah.
Okay.
Yeah, but if you choose, you can only choose one buy, one sell.
Okay.
Barry's not in the meeting. Her son is sick, and so does herself. So she's probably will have only 6 votes, I believe. Five, So one person's missing. Somebody.
I'm still trying to.
Oh, you just go to your email. I send you an email and then just click. So one person's recommend sell 5, one person's recommend to sell LKQ.
So would we ever sell it, or would we say we need a challenge for it?
That's a good question.
My preference is a challenge, or at least a brand new SSG to compare, which I think we have with LKQ, but I think the challenge makes sense. But certainly, like 5, I could not recommend a sell right now because we don't have a new SSG. That's next month.
Okay.
The only time I agree with violating that that personal rule, it's my rule, is if there's something that you find out that management has stolen the treasury or something that been caught in lies, then I would recommend buying or selling it just because of that. But for the SSG portion, I think we need new SSGs.
Yeah.
That's the way I've lived.
Okay, I don't argue with that, but we also have $1,000 in the treasury that's not spent, right? Didn't we not buy for a month?
Yeah,
Yeah,
we didn't.
We didn't pick credit services.
Yeah.
And I have a question. Did we buy $2,000 of a stock because we also didn't buy one other time?
I only remember one time. I thought we bought.
Last time we bought.
I'm not sure.
We didn't do the credit services, and I think there was one other time when we didn't do the leasing, AL, air leasing, and I forget what the other one was.
I'd have to go back over our minutes.
Okay. But yes, I don't know. Would we buy $2,000 of a stock, or would we buy 2 stocks?
I would prefer buy 2 stocks rather than 2,000 because the reason we chose 1,000 is for tracking.
Okay.
Easy
so
to
maybe
track
we need
comparison.
to start evaluating more than just 2 stocks a meeting.
Yeah. I don't have, I mean, I agree with Gia, although if there's a company that's really dynamite and we think, to buy it, all we have to do is, I'm willing to buy it with a notation that now I bought it twice. So the numbers are going to look a little screwy until you see the note and said, oh, we bought it twice. It's what Mark does on
Manifest.
his stuff. Yeah, Manifest
And
Investing.
And with our tracking on Morningstar, we can just make 2 separate entries. We can make $1,000 entry one month and $1,000 entry another month.
Okay.
And depending on how the share price goes up and down, those positions will change.
And they don't merge the two?
You don't have to. You can
okay.
enter them separately.
Okay. Because I think Yahoo, they've always merged. That was the problem I had with Yahoo portfolio.
Okay, so we have 6 minutes. So I think we should close the voting.
Yeah, so the majority, I don't know if Jean figured out how to vote, and we can, she and I, we can work together how to vote
There
this.
she is.
Oh yeah, she wrote it, yay!
Yay!
All right, we passed the vote, and Roy, could you please purchase $1,000 of CVS at open market price tomorrow?
Yep.
Thank you. All right, next portion of the meeting is next month meeting, April 17th, 2017. And now next we will go over any questions, comments we have from the guests. I know guests, you cannot see us, but we can see your names. I'm just go from the top, okay? Derek, you are first. Any questions, comments about our meeting? Oh, sorry, we need to unmute them. How do we unmute them?
Click on the microphone.
No. Oh, there you go. Okay.
No questions for Derek tonight, but that was I liked all your presentations. They were very good.
Oh, thank you. Okay, Frank, you're next. Do you have any questions, comments? You are unmuted, Frank. You can just go ahead and speak. Frank?
Maybe it doesn't work.
Oh. So Henny. Well, I guess we can give a chance to Henny. You're good?
I'm fine.
Okay,
Yeah,
you're fine.
thank you.
And a couple people got dropped when we asked the questions. And there's a Richard and Martha. I think they left. Yeah, Frank, did you figure out? You can also type questions if you cannot hear or cannot talk for some reason with your microphone. You can type your question if you like.
Is Hanny interested in joining the club?
Yeah, that's Henny. Are you interested to join the club?
Yes, definitely.
Great. So then we will vote Henny in at the after the meeting. So Frank is unmuted. Frank, can you hear us? You can also raise hand. Well, why do I send an email to Frank, see if he has any comments or questions for us?
Okay.
All right. So any other questions, comments from the members?
We didn't talk about this, I don't think. We talked about this before the meeting started, about starting a separate portfolio for the Schwab U.S. market broad, putting $1,000 a month in it to track against our portfolio so we can see how we do if compared to a person that just put $1,000 in the Schwab every month. So that would give us a good benchmark.
Okay. So if that's the case, since we have a extra $1,000, right? We can use that.
Well, I think with the Schwab, you can keep it in cash, I think. Or we just don't invest.
I think we can do like with Morningstar. You can have more than one portfolio.
Yes.
And we can make that the tracking portion.
Yes. Yes.
And
okay.
And if you want, I'll check into that. I think I can go back. We can look at historical prices.
Okay.
And we can, at least estimate them. And
okay.
I could,
So I already started a portfolio. Well, I copied our watch list. So if you want to look at that, it's called VICS portfolio.
Okay, but this.
I'll show you. It's called.
Okay.
Let me see if I can get to it. It's called VICS Club Portfolio. And see how you have watch lists? We have a bunch of watch lists down here. I just copied the club portfolio and I made it into a portfolio instead of a watch list. And that way you can, with these, you can add dividends and splits. I think Heiko just split today. So here, dividends and splits. So you can update those for your portfolio.
Oh, okay. You make it a transaction portfolio then.
Yeah.
Okay.
So
that's cool.
Did you see that, Jay?
Yes.
Yes.
Okay.
Yeah, Jane. Go ahead.
No, I just say. Yeah,
oh.
I saw it.
Okay. So yes, Tom, if you want to go in there and create a new Schwab one, that'd be great.
Okay, will do.
Okay.
Okay, great. Okay, so this concludes our meeting, and please, members, don't log off yet. We still need to vote Henny in. But before that, Henny, if you don't have any other guests, do you have any other questions? Last chance. You can always email us. Our email stated at your meeting invite. You can send it to us, your questions, if you have. All right. Well, thank you so much for tuning to our meeting, and we hope to see you next month. Henny, I will email you the results, the voting results, to accept you to our club. Okay. All right. So should we just log them
Should
off?
Yeah.
Yeah. Yes, please.
So how do you delete people?
Right. There's
Dismiss. I'm
dismiss.
dismissing Frank.
Okay. Dismiss. Okay.
I'm dismiss Derek.
Yes. Okay.
Has anyone else expressed interest in joining the club?
Well, there's one lady, I got one correspondent from a lady. She said that her current club is not a good fit for her. So I responded email to her, and then, but she did not show up tonight.
Oh.
Okay, I'm going to stop the recording. Is that okay?
Yes,
Since
please.
it's 7:30?
Yes.
Okay.